Hello everyone and welcome to episode 5 of the UK Trading Academy podcast. Here we have Henry. How are you doing, Henry?
I'm doing amazing. How are you doing today, Charlie?
Good, thank you. So it's Monday currently. How was your weekend?
Yeah, it was incredible. Had some time with my family, went to the beach, and we had an incredible time. Yeah.
Nice.
What about you?
Nice.
How was the weekend?
Yeah, it was good, thank you. Yeah, went back home, seeing the family. Yeah, just spent some time with the family. It's always special. I can imagine you were still working though.
Yeah, I'm always working, checking the charts. On Saturday, we had the Bitcoin Halving event, which was a big milestone for Bitcoin. And so far, I was expecting to see some price action in the marketplace, but there hasn't really been much movement so far. I think Bitcoin was resting at 63,000 before the halving, but after the halving, nothing much really happened. You know, a lot of people have this mindset that immediately the halving occurs, they want to see the effect instantly. They want to see Bitcoin do a 10x. You know, but it doesn't really happen that way because I was basically awake. It was around 1 a.m. London time.
Wow.
I was awake.
Looking at the markets. Nice.
To see whether there's going to be any sort of effect, but there wasn't any.
Okay.
You know, but since after the halving, Bitcoin price has gone from 63 to 66,000 currently.
Yeah.
I think current price action right now is 66,000.
Let's have a look.
Per Bitcoin.
Yeah, 66,100.
Yeah. So far, a lot of traders are forecasting 100,000 Bitcoin, 90,000 Bitcoin. I saw this other person also say $17,000 on Ethereum.
Okay.
Mostly they were using previous price actions on Bitcoin in order to try to forecast where the next top is going to be.
Yeah.
But in my opinion, I really don't think this time is going to be anything like the previous times. I think this is going to be way different from anything we've ever seen. It could be higher, it could be lower. Nobody knows. At the end of the day,
for sure.
It's all probability. At the same time, there's a lot of retail money that's like before you just buy Bitcoin through either is a centralized exchange or a decentralized exchange. And a lot of people feel that is risky. But now with the Bitcoin ETF in the US and also in Hong Kong being launched, it creates another level of exposure for cryptocurrency. So many retail traders have the opportunity to come into the market, and we're talking about billions and trillions of dollars could easily flood into the market, because it's quite difficult for that kind of money to just keep coming into the market through Coinbase,
that's right.
Binance, and with all the regulation and restrictions, you know, a lot of these apps, they restrict you to how much Bitcoin you can buy in a day.
Okay,
Some will tell you can't buy more than £5,000. Some will say not more than £20,000 in a month. So it's just so much restrictions with these exchanges. But with the ETF, it's literally pipeline of money flooding into the market. So you can't say because of what Bitcoin did 4 years ago, 8 years ago.
Yeah, predicting it now is completely different.
You really can't predict, because this time Bitcoin could hit 300,000.
Yeah.
It can hit 300,000. So I'm not saying it will anyway, so people don't listen to what I just said then. But it's a very high probability in my opinion. And I'm watching a lot of assets as well. And already I've been dollar cost averaging into the market. Even during the bear market last year, I was still buying a lot of coins, then made some profits, took some profits, reinvesting again as well. But it's really gonna be an incredible opportunity for so many people who know what to look out for to invest in the right assets that has high potential for growth. Assets like Polkadot is one that I'm watching as well, because it has to do with interoperability of blockchains.
Okay.
So I think it's gonna play a big role in cryptocurrency. So it's one I'm watching. And also from the technical analysis, there's a significant break of structure on the weekly time frame. So all I wanted to see was a retest at the last down close candle before the expansion, the broke structure, which it did. Okay. I think last week or a few weeks. And my price target for entry was 5.7. and it hit that already. So I think the current price action is around $7. So it's just one I'm really, really watching. But it's a big cap because we have big cap, medium cap, and low caps. So big caps are like the likes of...
In terms of market cap?
Yes, in terms of market cap, like Ethereum, Polkadot, Cardano, Doge.
Yeah.
They're all big caps. So Polkadot is a big cap, so I'm not really expecting like 100x return in 1 year.
Yeah.
But in the long term, probably 20 to 50x max. In the long term, we could do more than that, but it's one to watch out for.
Yeah, still very good, isn't it? 20 to 50x.
Yeah,
you know.
Yeah, it's still very good. $1,000, you can flip it to 20,000.
Yeah.
Where can you get that? If you know, when people like a lot of people talking about Nvidia, how it's rallied up, it's really did astronomical numbers. But when you look at what crypto is doing, it's kind of like it's not really done so much compared to that. But that's the thing. That's the power of cryptocurrency, and that's what I love about the market. Early we are in the market as well, because if you think about how big this industry is going to be in 10, 20 years,
for sure,
you'll see that you can actually get good assets that can do between 50 to 1,000x. You know, but it's gonna take some time and some research and patience as well. Because one thing I've learned in cryptocurrency is patience plays a huge role. If you're not patient enough, you're gonna lose money and you're gonna miss out on good money. So it's gonna be you selling early and then waking up and it's done at 20x. You know, it happened to me when I was I bought Bitcoin and it hit 30,000. And then I was like, okay, I'm out. And then a few days later, it went to 60,000.
Okay,
And I missed out on 6 figures of profit there. So that's the thing. You also need to have a strategy to get in and a strategy to get out.
That's one. Sorry to cut you off there. One thing I was going to ask you is, what did you learn in the last bull run? Because I know you was involved in it, weren't you?
Yep.
What's one thing that you could maybe take from that you'll maybe do different this time, would you say?
So one thing I learned from the last bull run is to take profits, you know, even if it's 10%, 15%, you need to take profit levels,
right?
You know, and when price gets to your take profit level, no matter how impulsive the candle is looking, even if it looks like it wants to go to the moon, take that profit.
You never know, do you?
You never know, because anything can happen. It can literally switch in a second and go from bullish to bearish. You know, because I can remember flipping a $20,000 account to 6 figures, and I didn't take any profit, and I literally lost almost all the money eventually. So, and I'm just like, it was a huge mistake on my part, but at the end of the day, it's all a learning process, because nobody actually taught me how to do this thing from A to Z. You know, there's not really any course out there that is going to teach you from A to Z. It's just they're going to teach you one part of it, the other part of it, and it's also new as well. So like if someone's trying to teach you something they've not really been involved in for like a decade, you know, we need that decade of experience before we can say this is the best way to do it. But most people don't have that decade of experience in crypto. Crypto is, I think Bitcoin is barely 13 years or just something thereabouts, if I'm not mistaken. I think it was in 2009 or something. So it's not really been that long. So you can basically even check it on the charts. I think
around that sort of time,
I think it's 2009 or 2011, just between that time frame. So we don't really have so much data to work with. So that is why it can be really confusing for a lot of people to know what to do. How do I take profit? You know, people think, how do I get in? Getting in is the easiest part. It's literally the easiest part. You can get in right now. You can get in tomorrow. You can wake up in the morning and just get it. You know, the hardest part is getting out. When are you gonna get out?
Because when you're in profit that much, like you said, making 6 figures, that's serious money. For a lot of people,
Yeah.
a few years' work, you know.
Yeah.
So carrying that over, like I said, to this bull run, are you going to continue to have that profit target? I'm going to take X% away there, X% away there.
Yeah.
That sort of strategy.
Yeah. That's really my strategy. Every single crypto I'm investing in, I have profit targets, in as much as, because this bull run is going to be different, in my opinion, from every other bull run we've encountered. In as much as it's going to be different, I wouldn't be surprised to see astronomical numbers. But at the same time, I have realistic targets. So when price hits those realistic targets, I'm taking profit. Now, it doesn't mean I'm going to take everything out of the table. I'm going to leave something on the table. I'm going to leave something on the table.
Just let it run, do its thing.
Do its thing, have realistic take profit positions. If it does this XYZ, I take XYZ. If it gets to this percentage, I take this off the table. And then when it hits my best case scenario, I'm taking 90% off, and then I'm just going to leave the 10%.
So you've still got a runner on there. You know? Yeah.
So I'm gonna. So
you're covering all bases, really, aren't you? Yeah, that's brilliant.
So that way, I'm gonna leave a runner, and if the runner wants to go to the moon, amazing. Then if he wants to go to zero, I honestly don't care, because I've already made a lot of profit while it was going up, and I've secured my capital investments, taking 90% of the profit. So it's just 10% of the profits. It's now on the table.
Brilliant.
You know, so that way you can have something to also invest back in the market, because
very true. On the pullbacks.
On the pullbacks, and when we also get into another bear market, because what goes up must come down,
of course.
So
very much so.
That's the problem most people have when it comes to when we get into a bull run. They just have the mindset it's gonna keep going up. They don't think, oh, wait a minute, when is it going to go down? Nobody knows when it's going to go down, but you need to be ready. You know, when you have 7 years of flourish, you need to expect 7 years of famine.
Beautifully put. Yeah, for sure. So following on from that then, what did you do? I know you said in the last bull run you still took profits, you did the correct thing there. What did you do that maybe wasn't what you wish you did, if that makes sense? What could you do differently, if anything, or might you just do everything the same?
One thing I would have done differently was not marrying any assets. You know, just not marrying any assets. Just see them all as cryptos. No matter what is going to change the world, I don't care.
I suppose because you attach the outcome to that specific asset, don't you? And then your money is in that. So you're addicted to what that does.
Exactly. Just trying to remove that from my mind. No matter how amazing the project is, whether it's going to change the world, make us immortals and take us to space, it doesn't matter. You know, it's definitely going to have downtime. It's going to have a correction. The bear market is going to affect it. No matter how great the project is, just don't marry the project. Just take profits, reinvest in other assets that you see that has good potential. Because I was invested in Bitcoin, took profits, invested in Ethereum, and then I held Ethereum for too long, lost some profits, even though I made profit eventually. And I was actually looking at Cardano then, when I wanted to jump out of Ethereum and get into Cardano. But at the same time, I was like, Ethereum it has high potential for growth. It's doing this, it's doing that. Let me just hold on to it. And I missed out on putting that money in Cardano. And even making way more. Because if I had put that money in Cardano, it literally, I think it did like 300% afterwards.
Wow.
You know, but because I just held on to Ethereum, and now took some losses on my profits. You know, it wasn't really a loss, but I lost some profits instead of making more profits. So I think that is one thing that's personally I learned from it, and anyone watching that out there, just don't marry any assets. You just invest, make profit, take your profit, secure your capital investment, because cryptocurrency is high risk investments. And
for sure,
in as much as I believe they're going to be around in the next 10, 20, 30 years, but at the same time, it isn't a certainty. Like there's no certainty. Like we could wake up tomorrow and for some reason there's a regulation and
just popped out of thin air.
It just
overnight,
pops out of thin air, and
you change everything.
And if you're in the UK, you can't buy Bitcoin.
Yeah.
What are you gonna do about that? So things like that can happen. That's why take profit when you have profit on the table, even if it's 5%, 10%, even if it's 1%. It's something.
That's it.
Like there's this saying, people, once there's a bull run, you're gonna see a lot of people telling you diamond hands.
Yeah.
It's good to be a diamond hand, but at the same time, diamond hand without money, that's no longer a diamond
exactly,
hand.
Yeah. You've got to be grateful for what the market gives you as well, haven't you? Like, you've got to accept that, it could do anything. So when you are running in that amount of profit, I can imagine it is difficult to take some, because you're thinking, if I just leave it, it's going to be a lot more. But like you said a moment ago, with leaving all bases covered, if it does decide to go to the moon, then you're going to profit from that as well, because you've got that 10% runner, and it's spot holding as well. You don't do leverage crypto?
Rarely. And even when I do, it's only Bitcoin. I try not to trade a lot other ones with leverage, because sometimes there could be a lot of spikes, down, it could wipe you out. So even Bitcoin as well can do that sometimes. That's why I rarely trade it with leverage, but sometimes I do when it looks like a high probability setup.
Yeah,
I do trade it with leverage. But for new traders, I will absolutely tell you to stay away from trading crypto with leverage. It's better to just buy spots, or if you see an asset you believe it has a high potential for growth, you can invest in it and hold it for the long term. Because like I was doing an analysis, we were doing this analysis the other day. The people that have made the most money between trading and investing, they made the most money investing, not in trading. So they invested for the long term rather than trying to trade crypto or stocks for the short term. So basically how you do it, you can have the major portfolio on the investing side and then have a small portion of your portfolio for trading, because with trading with leverage, a lot of things can affect your trading psychologically, and you can blow your account.
Yeah, for sure.
So, and when it comes to crypto, that is very volatile. Like I was looking at this other trader who was talking about Bitcoin, how he's bearish on Bitcoin, bearish on Ethereum, and he's looking to leverage sell Bitcoin and leverage sell Ethereum as well. He could be right.
What was the reasoning behind that? Did he say?
So he was looking at SMT, looking at Iran on the buy side. That's what we were talking about. So he could be right. But at the same time, I would never leverage sell after the halving. I'll never do that.
Like you said as well, this one's different, isn't it? Because we've already reached an all-time high before the halving. So, I mean, I'll be honest, I'm following your lead on that one. Henry is the crypto guy. I'm picking up bits every day.
I'm no God is the greatest. God is God. I'm no God.
It's going to be an interesting one for sure. But so in terms of like the social media aspect, going back into that with people, influencers, that is, marketing projects and stuff like that, obviously they can have significant gains because we can see on, you know, coin market cap, even meme coins and stuff like that.
Yep.
What's your take on either, I don't know really what to call them, I guess you could say fake projects versus the ones that have sustainability? Would you still invest in those other ones like meme coins, those sort of things, or would you stick to the more, I don't want to say safer, but you know what I'm trying to say?
Yeah.
You know,
So
the more popular ones.
yeah, I'd rather stick to what I know.
Yeah.
You know,
Fair enough.
Like a lot of the time, I see people make the mistake of chasing some shiny objects,
Yeah.
shiny new stuff. You know, and most of the time, 90% of the time, they go to zero. Most of those shiny objects, a lot of the time, they go to zero. So I personally don't invest in projects that are promoted by influencers.
Yeah.
I do my own research, do the
course.
due diligence, make sure that I found this project myself and not just some random person sell it to me.
Yeah.
You know, because at the end of the day, the person is looking out for their own interests. So if the project is going to go to zero, they're not going to tell you.
Yeah, and a lot of the times, like if that does happen, or sometimes when it happens, you'll get commenters saying you're a scammer, you're this, you're that.
Yep.
Which I'm not going to say whether there is some truth to that or not, but at the end of the day, you've kind of scammed yourself because you've not put in your own, like you said, due diligence. You've not put in your own research.
Yeah.
So you've done yourself a bad turn, basically, haven't you?
The only person to blame is you.
Yeah.
And in cryptocurrency, you make profit, you lose. The only person you can blame or thank is yourself.
Yeah.
Because the industry is new. So rather than just jumping into any project because someone else talked about it on YouTube or Instagram or TikTok, because soon it's going to be blazing hot all over social media. This is the next Bitcoin, this is the next Ethereum, this is the next SHIB, the next Doge. It's going to be everywhere. People are going to try to shield these coins to you. And if you are the kind of person that you never do research, you just buy coins because you saw your favorite influencer talk about it and say this is, like I saw this one, a lot of celebrities promoted it one time. I think it was Ethereum Max or something.
Okay.
You know, I don't even know how it's doing right now. And
What's
a lot of them
Ethereum
eventually,
Max?
yeah, a lot of them eventually got sued because I think people invested in it and lost money. So,
Wow.
and the people who invested in it, probably their followers, and they invested in it because their favorite celebrity talked about that coin. So it's the worst way to invest. The best way is just invest in your knowledge.
Yeah, definitely.
That is the best way, because if this is going to be here to stay, then the opportunity is endless. You know, so rather than just throwing money around and lose it all and then start from zero, why not keep that money in a safe place and then buy a course that will teach you how to invest in crypto.
Yeah, exactly. Yeah.
And then you can start from there. Once you've got the right knowledge, you have all the time in the world to now invest in the right projects. And if you don't know what to invest in, you can start with the big caps like Bitcoin, Ethereum, and before you start now going down. Personally, if you are new and you don't have that advanced knowledge of crypto, stay away from low caps.
Okay.
You know, if you don't have the advanced knowledge in crypto, stay away from low caps because they are the easiest to go to zero.
Okay. But equally, they are
the ones that can flip 1,000 to 1,000,000.
Yeah.
But at the same time, they can send you to zero easily.
You've got to tread carefully, haven't you? And that's what it boils down to as well. I think, you know, not everyone wants to invest in something that can go to 10 trillion or to zero. Like some people want the slow and gradual, you know, investment. So you've got index funds, that sort of thing, the S&P 500, something more simple. That's the nice thing about this industry as a whole, because you don't just have to invest in one thing. You've got multiple things to really spread the risk, basically, isn't it?
Absolutely.
So in terms of the market bubble or the psychological bubble, when do you think that's going to reach its peak? Or do you think we're getting there now?
Well, I don't think anyone can actually predict when the psychological bubble is going to kick in.
Okay.
But so far, if you look at the Fear and Greed Index, I think it's at 60. Last I checked, 60 something. So it's not really, we're not there yet. But we're going to get there. Trust me. It's going to get to the point where you look at it and it's like in 98%.
Really?
And when to know where we're at the peak is when you go to App Store and you see crypto exchanges. They are the top three.
Yeah.
When you see crypto exchanges, they are the top three.
Trending ones, yeah.
Yeah, just know we're at the top. It's time to run. It's time to run.
And when your grandparents text you about Bitcoin, that's when it's time as well.
And also when people who absolutely have no clue what is crypto, they call you up and tell you, so I want to invest in this coin, Shibu. And you're like, what? That's it.
And it's usually after it's had the pump as well, isn't it? After it's had the...
That's when people get into the market. People don't like buying when it's going down.
No.
For some reason they never. And I don't really blame them because it has to do with psychology. Yeah. People always wanna. They all want to support you when you're going up. It's just how it is with life. People want to support you when you're doing well. Yeah. If you're not doing well, nobody cares. Yeah. Except your family and people that really love you besides whatever success you're attaining, but it's just the same with crypto. When the price is going up, that's when people are interested in the coin. When the price is going down, they're not interested in it. In fact, they call it a meme coin. And you see people saying, oh, it's going to zero. The same thing happened to Bitcoin. I saw a lot of traders, investors, when Bitcoin was at 15,000. So many of them were calling for 10,000. Some said 5,000, some 4,000. Some said it's going to zero. Yeah. But that was the perfect time to buy Bitcoin. Like we gave it to our members. We told them buy Bitcoin at 17,000 because it was so evident. The daily break of structure. It was literally so evident. I was like, this is the perfect time to buy Bitcoin. Price came to the downside, mitigated an inefficiency from the 12 months, 6 months. And all we want to see is a daily break. Yeah. And right here is the daily break of structure at 17K. Now is the perfect time to buy Bitcoin.
That's the power of technical analysis. It generally works.
It does
on any market.
Yeah, absolutely.
It is what it is, isn't it? The price action is the price action at the end of the day. Yeah. And if you've got a clean setup, take it.
That's the thing. If you've got a clean setup, take it. If it doesn't work and fails, that's okay. Yeah. That's why you use risk management. You wait again for another setup. If you see it again, you take it again. So let's say, for example, we saw the break of structure at 25,000 and we took it and then it went lower to 15,000, break again at 17,000. Let's say when it got to 25,000 and broke the structure and we had a portfolio, let's say our portfolio is 10,000, okay, and then we put in 3,000 and then it went down to 15,000. We saw another break at 17,000. Coming down, we put in 3,000. We still have like over 3,000 plus on the sidelines. And then boom, it's up from 17K to 66K. Yeah. Which is like over 3x of going to it's over 3x.
Over 3x, yeah.
So the 3K is now 9,000. So whatever we put in the other one at 25,000, it's still going to be in profit now anyway. Yeah, definitely. So that's the thing. That's the power of dollar cost averaging and also risk management. You manage your risk, have strategic areas, also have things you want to see before you engage. I never buy into any coin because I like it.
What do you mean by that?
What I mean by that is because maybe the owner of the coin or maybe because of its utility.
Okay.
I never buy into it because I like it. I buy into it because all my checklists align with
Okay,
it.
the stats line up.
Yeah,
The technical analysis.
Yeah, I go from fundamentals to technicals to quantitative analysis. Once everything's aligned, I'm buying it. And I have my take profit positions. Once it's there, I'm taking profits and I'm out. I don't care if you're going to change the world.
Yeah.
You know, because at the end of the day, I don't know what's going to happen tomorrow.
Yeah, very true, yeah. Like you said, it could be up one day, the next day, zero.
That's the thing. Anything can happen. Look at what happened to Luna.
Yeah.
You know, when Luna was at $100, my technical analysis was showing me Luna is going to come to $1. You know, and I was talking to...
That's interesting.
I was talking to a lot of the investors I was working with then, and a lot of them laughed at it. They were like, dude, why would you even think this is going to go to $1? And I was like, well, we're going to find out. This is crypto. Anything can happen. And it went to zero.
Wow.
You know, the coin went to zero. It didn't even go to $1.
Wow.
So that's the thing. It happens in crypto, and that is why when I do an analysis, I just mark it up, put my alert right there, and forget about it.
Okay. So for you to analyze that to say it's going to go to $1, did you do the same thing what you do to analyze when assets are going up, but you've done the same thing reverse kind of?
Yep.
Wow,
I do the same thing when it's going to go up. I do the same thing when it's going to go down. I use it. It's kind of like a quantitative analysis. I use it to see how low it can go. I did the same thing with Ichi. I think I told you about that.
Yeah.
So when Ichi was at around $3, $2 to $4, that was my accumulation zone. And I also told all our investors that as well, and they all got in at that price. I think that was in 2022 or 2021. I can't even remember. So they all got in at $4, $3, $4. And I told them best case 140, medium case 70. So when it hits 70, take profits. 140, get out.
And it did just that, didn't it?
And it went to 147. And then when it hit 147, a lot of them wanted to hold to 200, and I'm like, I'm out.
Yeah.
So whatever you want to do, it's your money. But personally, I'm out, because when I did that quantitative analysis, I was seeing that coin go to like $2 again.
Okay.
You know, and I didn't really have any fundamental backing it going to $2. All I saw was technical analysis, quantitative analysis is telling me this can go to $2.
Really?
So I just got out, you know, and then after I got out, I just made a video, shared it with them as well. And it wasn't even up to a week, and it crashed.
Wow.
It crashed to 1.3 or $1.2, because there was an inefficiency right there, you know. So because when I do a quantitative analysis, I start to look for other confluence to align with that analysis. So I'm looking for things to align with the quantitative analysis on the technical parts. So when I saw that inefficiency, I'm like, this is high probability. It could hit this number. And then when it hit that number, I went to their group and I saw so many traders that were holding, hoping for it to go to $1,000.
Oh no.
They got wiped out.
I was just going to ask you, did you find out if they held on to it? Or?
Yeah, a lot of them held on to it. And one of the reasons why it crashed was they were over collateralizing the coin, because I think you can use the coin to get more of Ethereum on their chain. So it's just something similar to that. So many people were taking so much. It's kind of like you give me 1,000 and want me to give you 4,000.
So kind of like a loan, but for crypto, right?
But for crypto, and then so many of them were taking so much.
Really?
So at the end of the day, they couldn't keep up with the loans, so they had to liquidate.
Wow.
Everyone. So it was massive. I literally was looking at the charts and it just boom, wiped out everyone.
I bet that was a good feeling though when you got out though.
Yeah, it was a good feeling to know I got out. That's the thing. When you invested in crypto, always have realistic targets.
Yeah.
You know, scale out. You can leave something on the table, maybe 10%, 15, 20, you know, but never hold the entirety of your portfolio and be a diamond hand and want to hold it to the moon.
Try and be a hero.
Yeah, you're trying to be a hero. Like,
Yeah.
you know, there's no heroes here. It's just make money and leave.
Yeah. Take what the market gives you. Be happy with that.
Yeah, absolutely.
And then you can put it elsewhere or, save it, whatever you want to do with it.
Yeah. If you're invested in this coin, you need to have option B where you're moving profits.
Right, okay.
So if you don't have an option B, then you should be moving to USDT. Take profit to USDT.
Yeah.
So personally, what I do is I have the first coin that I'm invested in. When it's a good profit, I have another coin that is doing poorly that I'm also watching, and I'm taking the profits and I'm putting it into that one.
Yeah.
So when this one's doing well, the portfolio even grows way bigger.
Okay, yeah.
So rather than me just putting every profit to stable coin, I'm moving some of them to another coin that is not doing well at the moment.
Right.
You know, like for example, Ichi, I'm watching Ichi as well, and I think Ichi has very high potential. This is not me telling you to go and buy Ichi right now. But in the long term, I like what they're building. And another one I'm watching, and it's a low cap. So like I said, if you don't know what you're doing in crypto, stay away from low caps.
Yeah.
So another one I'm watching is DSLA protocol. It's also a very low cap. And Ichi is not even on any centralized exchange. I think it's only on decentralized exchanges. So if DSLA does well, profit goes to Ichi.
Some of the profit.
Yeah, some of the profits.
Yeah.
Some of the profit goes to Ichi. Now, if Ichi does well, most of the profits will go to stablecoin. Because after the two runner, I'm going to be on the sidelines.
Yeah.
Because anything can happen from there. You know, the market could have a retracement, or we could see another bear market, because after a bull run comes a retracement. You know, definitely. I still believe the market should continue to trend higher from now to the next 10 years, but there's always going to be a retracement. So you need to be ready for the retracement. You know, just for example, if you invested in Ethereum when it was at $70 and it went to, I think, 1,800, and you took profits, then it came down again to, I think, 900 or 400 or 300, I can't even remember.
Let's have a look.
That would have been another area to deploy the profits into the markets.
Okay, yeah. So from about 50 to 70, up to 400, and then back down into 50, to 60, and then all the way to all-time high, which was 4,800, give or take. So yeah, up, down, you know, shaking people out.
Exactly.
You know,
overall, the market still remains bullish. Overall, you can see the consistency. We create a higher high, create a higher low, and then create a higher high again, and create a higher low.
Yeah.
So it's consistently going to the upside.
Yeah, the lows are remaining intact.
Yes.
Yeah.
So all you want to do is try to sell as high as possible. You can't catch the top.
No, of course not.
But just try to sell as high as you can. And when it's down, you get in as low as you can. You can't catch the bottom as well. And then take it again and again and again. That's why you just have profit targets. If it hits this number, you know, I saw a lot of traders saying Ethereum is going to hit 17,000, which is possible.
Okay.
But at the same time, and they want to get out at 17,000,
Wow.
which is possible for it to hit 17,000. But at the same time, I'm doing analysis. I'm seeing it could go to 30,000.
Okay, yeah.
I'm not saying it's well, but that's the thing with when you do analysis.
Yeah.
You don't know what is going to do that or not. All you do is you put your alert right there or close to that position. It could hit 28,000 and then drop again, but you don't know whether it's going to get there or not. But when you have profit targets, if it hits 10K, for example, if it hits 7K, I take 10%. If it hits 10K, I take 20. If it hits 15K, I take 40.
Okay.
If it hits 17K, I take 60 or 70.
Yeah,
if it hits 20K, I take XY, just like that. So if it eventually hits 28K, now you can take 90% and then watch and see what it's going to do. If it keeps going up, great. If it crashes, better.
Yeah, because you've got capital now to deploy.
Exactly.
Yeah. If it does come back.
Yeah.
Well, not necessarily if, it's when, it is sometimes.
Yeah, it's a when, because everything that goes up must surely come down.
Yeah, so like we were just saying, Ethereum came close to the 5K.
Yeah.
You can imagine the millions of people involved in that thinking the same thing or very similar things. Once it reaches there, I'm going to come out of it.
Exactly.
And guess what? It doesn't. And then it comes back down.
Because the institutions, they are not waiting for it to get to the psychological level that we're waiting for. And their money is basically what's hanging the price.
Yeah.
Crypto is basically supply and demand. So once they pull their money, it's done. It's game over.
Yeah. They're capitalizing on what the majority are thinking. That's what they're doing, essentially.
Yep.
And it works time and time and time again, doesn't it? Yeah.
Time and time again. It works in Bitcoin, Ethereum. 20,000 was the psychological level on Bitcoin. It came to 19,000.
Yeah.
And crashed. And Ethereum 5,000 came to 4,000 plus and crashed. So this time, who knows? This time most people, they believe is 100,000 is going to be the top, but you can't judge what this time is going to be with what price has done the previous years. Yeah, you can't. It's just going to be different this time because of the ETFs. It has opened the door to another level of investors.
So there's more weight to it, would you say, this time?
Yeah, there's more money coming into the markets. Okay. There's more money flooding into the market, both retail, institutions. The thing with when you buy crypto in a crypto exchange, you basically have to do it yourself. Yeah. So you create a wallet, maybe a decentralized wallet or centralized exchange. You can create an account, buy Bitcoin, whatever you do wrong, your crypto is gone. If you send it to the wrong address, it's gone. Yeah. But with the ETF, at least you have somewhere you can go, sit down, have customer care attend to you. You tell them what you want, what you want to invest in, and they can help you. So it's a great thing, my opinion. It's a great thing for the crypto industry, and it's gonna help more people that have always wanted to get into the markets but don't know how to, or they feel like they don't know who to trust. Now they have someone to trust, someone they can go to, and the person's gonna help them, or the company. Okay.
So in terms of like a bank, is that what you mean, or?
Yeah, like the ETF funds, like BlackRock. Like a lot of institutions that have always wanted to get into Bitcoin. Right. Now they have the opportunity to talk to them, and they can help them to buy cryptocurrencies. Yeah. So you can just put the money in the ETF. Okay. Rather than opening an exchange and then trying to buy it yourself and lose your money.
Yeah, YouTube, how to buy Bitcoin.
Yeah.
And that could even open the gates, because obviously I'm looking at the total market cap there of crypto. That could even open the gates to maybe reach a new high, do you think?
Yeah, absolutely.
Because we've not done that yet, have we?
Yeah. What I do is I usually have worst case scenario. Yeah. Medium case, best case scenario. Okay. So for Bitcoin, my worst case scenario is around 90K, worst case scenario. The medium case scenario around 140 to 170. Best case 300.
Okay.
Excuse me.
Yeah. That's based on quantitative analysis.
Yep.
Yeah.
Yep. So best case 300. That's the best case. So it doesn't mean it's gonna hit those numbers.
Yeah, of course.
But I like to have something at the back of my mind, targets where I want it to hit. I don't like to just hold and not know.
Yeah, just hope for the best.
Yeah, hoping for the best. I don't like to do that. I want to have a number and then work with that. When it hits or when it's coming close to those numbers, I'm taking profit before it gets to those numbers.
Yeah.
So let's say my best case scenario is 300,000. When we're at 150, I'm taking 50% off. When we're at 200, 70%, 280, I'm out.
Okay.
I'm not gonna hold to 300.
Oh right, I get you. So in your mind you want it to go there, or you'd like it, but you're not betting on it with actual money, because like you say, you'd get out at 280, that sort of area.
Yeah.
And then whatever the market does, it can do.
Yeah, because if the price is an if it does go to 280, for instance, most people are going to expect it to hit 300. So that becomes the psychological level.
True. Very, very true. Yeah. Interesting times.
Yeah. I'm really looking forward to what the market is going to do for this bull run. And I'm also looking forward to see the effect it's going to have on the other traditional asset class, like the S&P, NASDAQ.
Yeah, even Forex as well.
Yeah, and Forex as well, Euro,
yeah,
Pound. I'm looking forward to see the effect it's going to have on them as well, because from previous years, when there's a bull run with crypto, you tend to see the NASDAQ, S&P, and Euro and Pound. You tend to see them rally as well.
Yeah.
So I'm looking forward to see what they're going to do, because now a lot of people are saying they want to see a crash on the Euro. Like we were talking the other day, so many traders are looking forward for it to go to parity, which I was asking you, what does that actually mean?
Yeah.
So, and what it means is it going to 1.0, right? Can you explain what that is?
It's like a flat level, isn't it? Flat line.
Yeah.
It's like you get 1 for 1 euro dollar.
Yeah.
That's what that means. So yeah, even some traders are saying lowest low of all time.
Yeah.
So below parity. But as we know, anything could happen. Anything does happen. So, it comes down to technical analysis, really, doesn't it? Those are our tools. We can only use what we have.
Exactly.
It's kind of like the charts are our canvas. We have our tools in terms of our knowledge.
Yeah.
We can apply certain things here and there, which, if you do have a proven system, it is going to work, obviously, over time, But, you can't be reckless with this game, because, it's going to be reckless with you at the end of the day, isn't it? So, I just love how there's multiple different things with it. And, like I said before, it's technical analysis throughout. It's like you don't have to trade crypto the way you trade Forex. Like, you wouldn't put all of your account or most of your account on one trade in Forex, or in a stock, or for example, it's completely different, like spot holding, it's completely different with the leverage and everything like that. But I think that wraps up today's podcast, I think, doesn't it? Yeah. Got through some good information on crypto there from Henry. Thank you very much.
Thank you as well.
So thank you for watching, everyone. If you would like to know more about what we do, you can head to our website, which will be in the description of this video. And all the usual things, like, comment, subscribe, hit the bell notifications, because we're going to be doing these every week now, aren't we?
Yeah, absolutely.
Talk about the markets, anything new that's happened and stuff like that. But yeah, without further ado, thank you for watching, and we'll see you in the next one. Take care.